Oh, yes. The next session is our Investing in AI panel. And I think they were all listening to that because I would invest in the computer fools. This is chaired by Antoine Blondeau, who is a good friend, investor, and advisor to CognitionX. And yes, he is here. Woo! Antoine, come up on stage, and we're going to you can introduce the rest of the team. If we have Siraj, Dharmash, Luciana, and Roy as well, let's get you onto the stage. Thank you. Oh, we have. Good. I couldn't see you. You all mic'd up?
I think I'm mic'd up, but I don't know if it's working yet.
It was just me who had no idea what was going on. Excellent. Thank you so much.
You're coming downstairs with me. Are you coming with the rest of your group and your teachers, or is it just you?
What numbers are they on? The mics on stage. If you give me those, I'll take them up. I only need two, don't I? Is Antoine on 8?
Antoine's on 1.
Right. No, I'm just asking James.
174.
174.
Can we have microphones for everybody here? Thank you. Thank you, Kate. Great. So good morning, everybody. This is going to be a very interesting session. It's such a nascent industry, and we've just begun to learn how to invest in it. So this topic is about investing in AI. My name is Antoine Blondeau. I am the co-founder and chairman of Sentient Technologies. You heard me talk yesterday. And I'm also the managing partner and founder of Alpha Intelligence Capital. That's a fund investing globally in deep tech, AI and machine learning companies, Series A to Series D. I have here 4 outstanding investors, Roy, Siraj, Luciana, and Dharmash. And I'd like first maybe for each of you to introduce yourselves. Roy?
Sure. Outstanding. I hope that the test of time proves you right. I'm Roy Bahat. I run Bloomberg Beta, which is Bloomberg's venture capital fund. We are based in San Francisco, New York. We invest exclusively in the future of work, which is what we've done since the day we started 5 years ago. And a few months into our fund's life, we decided we're going to run our fund a little bit differently. As a founder, when I pitched funds, it was always very opaque about who made the decision. So we just decided any one of us could say yes to a deal. And the relevance to that is that in December of 2013, one of my partners came to me and she said, I think it's time that we really focus on AI. And I said, I think you've been reading too much science fiction. You're way too early, you're wrong, but hey, if you want to work on it, go ahead and work on it. And she did, and I ate my words about a month later. And so since December 2013, AI has been our primary investment focus. And we are whatever you call the beginning of a company's life. I don't know, pre-seed, seed, just the beginning. That's when we invest.
Cool. So I'm Siraj Khaliq. I'm a partner at Atomico, which is a London-based VC fund. We are Series A and beyond, but we're best known perhaps for our entrepreneurial DNA. And I myself am an entrepreneur. I'd started a business where we use machine learning in agriculture to help farmers increase the yield of their crops. And now, I think we're, like myself, there are quite a few computer scientists at Atomico, and we focus very much on my team on deep tech and things that take a while to realize, things that are kind of big vision.
Hi, thanks so much for having me here. I'm with Accel. We're a large global venture capital fund. We have our roots over in Silicon Valley, have been active in Europe for about 20 years, so we're very much early believers when it comes to Europe and international expansion and international talent. We also have funds and offices in India. We're early stage investors at heart, so our sweet spot is very much Series A, but we do have flexibility to invest at the seed stage, and we also go quite above and beyond Series A and make growth investments as well. We are only technology investors. We've been investing in artificial intelligence businesses for several years now. Yeah, thanks for having me here.
Thanks. Hi, I'm Dharmash. I'm a CEO, entrepreneur, turned to the dark side of the force 10 years ago as a VC. I'm a partner at Lakestar. We're a Eurocentric global fund. We invest Series A and growth, check sizes between a few $1 million to $50 million. Investors in things like Spotify, Airbnb, blockchain.com, and 5AI, and a couple of things, people who are around the table.
Thank you. I think, Dharmash, you're wired as well as a mic, so I don't think you need to hold two. I know you want to be heard.
Does that work?
I know you want to be heard, but still.
I'm loud enough.
All right. So let's dive right into it. So AI is a big topic. 3 years ago, nobody was talking about AI, but now everybody does. So we're in this middle of this hype curve. I think we could agree that there's some hype here. So I want to ask, maybe starting with you, Dharmash, hype versus reality. Where are we on this front?
Well, look, I think, as always, there's kind of overestimation and underestimation, and the question is always the time period, as the saying always goes. And so kind of in the medium to long term, clearly, as robots and computers start to make decisions, they will change many value chains and change many industries. The debate is around the speed of acceleration and application. Today, we're at the very early stages of seeing many ideas, many visions, many thoughts, and few of them are beginning to be applied and being proved to be of value. So I'm not answering the question because I don't believe it's hype. I think there is something tangible, but I think the speed of how it translates will take time, as all technologies over time have done.
So the speed of technology will time to translate into something tangible. Luciana, you've invested in stuff that you see is already tangible?
I think that when I think about investing in artificial intelligence, I would categorize this in two different categories. So first of all, there are the companies that are building a product that, thanks to AI, is going to replace a previous product that was probably rule-based. And those companies typically exist thanks to the emergence of artificial intelligence and the fact that you can actually apply it and use it. And I'm thinking of businesses around fraud, for example, or financial crime, and so on and so forth. Those are some examples. And then the second category is most technology companies that actually are forward-thinking, I think, are starting to use artificial intelligence in some shape or form. And when I say this, I mean not only decision-making, but also computer vision and NLP, et cetera. So one small example, I was actually thinking about this. Basically, I think by 10 a.m., I will have used AI in 3 different ways. So I wake up, and my partner always asks Alexa what the weather is. I don't get it, because it's faster to just get it on your phone, but he likes to do that. And Alexa will understand what he asks, and will give that information. And then I typically take an Uber to work. I'm embarrassed to say, but it's true. I'm a little lazy. And it usually takes 2 to 3 minutes for me to get my Uber, because Uber will use predictive models to understand how many drivers to put on the road at that particular time in that particular neighborhood in order to create an efficient marketplace. And then I get to work, and I'm checking my email, and I'm probably listening to Spotify that uses personalization and is recommending music based on what they know I like. So these companies would probably have existed, Spotify would certainly exist without personalization, but I think it's a better product and a better service thanks to AI. So that's how I think about investing in AI.
And Roy, so as applied to the future of work, which was the original theme, right?
And the current theme.
And current theme. Do you see stuff that's tangible also already?
Yeah, definitely. I mean, I have to say, I think I agree with Dharmash in the sense that I don't think AI is overhyped at all. I mean, I think in the book that will be written about AI, we maybe have opened the book to the first page. And one way we think about it, and people a few years ago were talking about it. I mean, I think we may have been the first fund to raise our hands and say we have a focus in AI. And we published this landscape of all of the different AI companies in different domains. And what was interesting is many of them were tools companies, as some of them are now. And I think it might have been a beat too early for those because they had nobody to serve. But it depends on what you classify as AI. As an economist, I studied regressions. And a regression model and a machine learning model can, under certain circumstances, be roughly the same thing. Sure. And those have been useful all along. So I think we have 2 phenomena. We have the real phenomenon of building things with AI. And then we have the marketing epiphenomenon all around it where, I mean, you know, we're simple creatures. We like when things go up and down. That entertains us. And so we will relabel them. But fundamentally, I think that whether it is a robotics company that patrols your office at night to keep you safe, like Cobalt Robotics, or Textio, a word processor that predicts the future by analyzing, in this case, job descriptions and now recruiting mail to say, please change this word so you can get more female applicants, or now the beginning of more tooling companies like Weights and Biases that allows you to manage a thing you didn't need to manage before, a model. You know, I think that it's all over the place, all around us. I mean, all around here.
And the 3 examples you just mentioned, they're all portfolio companies of yours?
Yes.
Great, super.
I think I'm constitutionally forbidden from naming something that isn't a portfolio company or from picking a favorite. So I will obey the VC rules.
No favorite children in your portfolio?
I love all of my children. No, actually, I think we work for them. So I hope they love us, but we just work for them.
Siraj, so continuing on this theme of you know, hype versus reality, and I think what I'm hearing is that there's more reality than meet the eye here. You made the transition from being an operator to an investor. Obviously, you're believing in the reality of it when you did that. Why did you make the transition?
First of all, you know, I was co-founder of my company, CTO. People with this profile have traditionally not become partners in the VC world. That's starting to change. And I think one of the big things that has started to change that is the fact that our skill set is very relevant to this new wave of companies, you know, deep tech, machine learning. For me, you know, we started a business in predicting yield for farmers, initially for insurance, and then we created a service out of that.
This was at Climate Corp, right?
At Climate Corp. And for us, you know, we stumbled into this, applied machine learning in 2011 before it was cool. And then using that, it allowed us to build a pretty respectably sized business. So that made me a believer in the fact that, yes, you know, things that you normally would not have associated AI machine learning with, like growing crops, suddenly can be very significantly impacted by it. And that got me really excited about the fact that, you know, how many other businesses are there, how many other sectors are there where this can happen. And you know, Atomico, which is our seed investor, approached me, and it was just a no-brainer. They saw that this was a wave that they wanted to be really focused on. I was excited about it, so it just made sense.
Now, and do you think that you know, experience at Climate Corp as an operator, as CEO, and before that at Google, do you think that this makes you a better investor? Because we're going to talk in a minute about how do we diligence companies. It's hard, right? So as an operator, as a
I hope so. But I think I hope that it brings relevant experience to the founders, and we've heard that it does. So that's good. You know, because we've often been through things, not just myself, but other operators at Atomico, because we have quite a few people we try to bring in from this background. You know, we've been through some of the same problems, and that helps us perhaps with how we speak about them. I think it also makes us more humble because, you know, we've all had these experiences where people who don't know anything about what you're doing are giving you advice as if, you know, you haven't thought about the things that they just thought of in the last 3 minutes. So having seen that, I'm actually much more respectful of entrepreneurs and more considered in how I dish out advice and you know, recognize the blood, sweat, and tears that they live day to day.
Right.
I think the fascinating thing about being an investor is that it's really multidimensional. So I can absolutely imagine how coming from an operator angle is really helpful. But if you think about it, I also find it very interesting that you have people like Mike Moritz, who are journalists, or Matt Coller, who studied music for his undergraduate degree, who are wonderful investors. And I really think that has to do with the fact that in venture, you don't have to be just good at numbers or just good with people or just be a visionary. I think it's really quite multidimensional, which is why you see people from all paths of life in this industry.
Right. So, and yet this is, you know, deep tech, right? So how do you think that...
Is it deep tech?
Well,
I actually don't know. I mean, I think they're like any other domain. There is AI that's deep tech, that's expanding the frontiers. And you know, I remember when we met Textio for the first time, and we said, are you guys building a technology company? Or are you guys taking technology that already exists and bringing it to market? They said, we're bringing it to market. There is no technical risk here. And obviously, they've innovated. So I just want to, I guess part of the reason I think AI has acquired this not quite Bitcoin levels of hype, is because we sort of allow it to be seen as the domain of the white lab coats. And it's not anymore. I mean, it is now much more widespread than that. So
yes, and yet if you, for example, use a framework like TensorFlow, it's still a black box to you, right? So there is here areas of understanding, right? How you arrive at a particular outcome. So how do you due diligence this?
So you're saying that because TensorFlow is a black box in the sense that you can't tell which features of the model end up being predictive of the outcome?
Correct.
I mean, I have another way of working that's like that, which is when I hire somebody and ask them to make a decision, I have no idea what's going on in their brain.
Correct.
And so it's the exact same thing.
Correct.
You diligence it the same way.
Correct. Good answer. Anybody else wants to talk about the black box?
I think I'd just add to that, and I think I certainly agree with parts of your sentiment here. I mean, talking about an AI startup is not something we're necessarily going to do in 3 years' time. The way we don't talk about, oh, I just invested in this hot big data company, right? That was all the rage, and now it's not, because every company is a big data company, every company is a cloud computing company. So it's going to be much more about, okay, you're focusing on medical imaging, or you're doing fraud detection. That's what you specialize in, and AI becomes this tool that everybody uses. So we may not be having this conversation in a few years' time. And that's totally fine. That's the way it should be.
So expanding on what Roy was talking just about now, he was making effectively as a difference between users of AI and doers of AI. How many of you guys are really investing in algorithmic science, people who are trying to further this, as opposed to people who are taking a problem and trying to solve it through commonly available AI tools?
I think we take an approach probably, for good or bad, that we probably generally would invest at a point of, we invest slightly later, so at a point of product market fit. And so, as some of the guys were saying, that there's a piece around traditional evaluation of problem solution and being able to see the understanding or the early stage of clarity of problem, clarity of solution. So to your question, there are a number of ways you can due diligence that, from customers to seeing some traction to this wave requires to solve some of the more complex problems, and be it a vertical or be it an infrastructure layer, requires a higher level of talent than the first wave. So investing 5 or 10 years ago in consumer internet, there was a different profile of people who are going to build world-class consumer internet companies. Now we're looking for clusters of hyper talent. And that hyper talent can recruit other types of talent. And there's a network effect in recruiting, which actually puts the bar very high in terms of traditional kind of venture investing in this space. And then the third thing I'll allude to is our natural sport is a team sport. And as Luciana kind of articulated, the best venture firms are quite diverse. And they're diverse in age, they're diverse in culture, they're diverse in sex, they're diverse in operating skills, they're diverse in speciality. And the nature of the great firms is, how do you blend the skills? So even if you're not an AI technologist, for example, we have 2 CTOs in-house as part of our expert team. So we always hunt in packs and work together, and we bring something else to create the creative friction around the right decision-making process.
Cool. Anybody else?
If I may add just one thing, I think that's spot on. I'm fully aligned with both Siraj and Dharmash, and we have internal expertise that helps. You know, we hunt in packs. I like to use that term as well. I will say, if I had to choose one thing that I always find most helpful in any due diligence, is actually talking to customers, because those are the people that are using the product day in, day out. Those are the people that are choosing to allocate budget or create budget for that particular product. And I think that they usually speak the truth.
I agree with that. And I just add, the extra challenge at day 0 is when there are no customers with whom you can speak, or when it isn't clear what the product market fit is going to be, you can't even call the potential customers. And in that sense, it's the same diligence challenges as anything else. Ultimately, and by the way, we try to be as transparent as possible. One of my issues as a founder with the VC industry was how opaque it is. So you can go to our website and you can see listed all of our criteria for investing. We published and actually open sourced our operating manual for running our fund. And we're just looking for one reason to believe that the thing has a shot to be extraordinary and that we could be the most valuable dollar on the cap table. But even that, in AI-driven businesses, can be very hard to find.
I want to switch gears a little bit and talk about the geopolitical landscape of AI and investing in different countries. We've got three Europeans here, all based in Europe, and then one in beloved San Francisco.
So 1.5.
1.5, yes, and the other half being Asia, which is great, right? So we're there. So Europe, let's start with Europe. How do you guys see investing in Europe? And is investing in Europe today a better return on investment than investing in the US or China?
I love this topic, so if it's okay, I'll jump in, and I'm so bullish on Europe right now. So I've been investing in tech in Europe for a decade. Obviously, I've always been bullish, but now more than ever, I think that Europe has been proving that it can generate large consumer outcomes for a long period of time with exits like Supercell and Spotify recently, and so on and so forth. But I'm very excited to say that in the last 2, 3, 4 years, we're seeing more and more interesting enterprise software companies, and especially AI-driven enterprise software companies that really have the ability to become the global category leaders in their particular segment, not the local category leaders, not the UK leader, not the French leader, the global leader. So I'm very excited from that perspective. And the reality is that...
Can you give us examples?
Sorry?
Examples?
I'm biased. I'm on the board of a company called UiPath. We led the Series A. This company is one of the fastest growing software businesses. It started as the underdog in robotic process automation, and now it's growing faster than everyone in the market. It went from 100 people to 800 people within a year and a half, 10 offices, and I think it's a really special story, even more so because it actually started in Eastern Europe, which brings me to my next point. I don't think in Europe there is one country that has monopoly on AI and software businesses. I think some of our best businesses are in AI-driven businesses are anywhere from Munich to Romania that I mentioned to Paris and Nordics and so on and so forth. So I'm very bullish. I think Europe is really holding its own.
I think also I feel equally passionate, maybe even more.
It's hard to be more.
Yeah,
in terms of,
like a fight on stage.
Exactly. Being a Brit who's sitting through Brexit at the moment, I'm very bullish regarding Europe. And so, look, in addition to the points well made, I think, in terms of this next wave, if it's likely to be more deep tech orientated, Europe has 6 of the top 10 universities in terms of ranking of computer science, 10 of the top 20. It's Oxford, it's Cambridge, it's UCL, it's ETH, it's in Berlin, it's Munich, etc. So we have hyper talent here. So it's up to us with this next wave. I think, secondly, that there is a macro-political debate here. And so a lot of time that we spend with government in the UK or in Germany and the EU, the common conversation in simplistic terms is broadly, look, if AI is the next wave and goes through a range of verticals, and computers and robots starts to make decisions in mobility, in healthcare, and transport in strategic areas, then what you have is likely, as in the past wave, the value will accrue to the software layer. If the value accrues to the software layer, today that value is going to the Chinese or the Americans. Therefore, in terms of government competitive advantage of nations, it's not just about taxing and regulating FANGs, it's about having local champions. And it's about having plural competitive markets. And therefore, in strategic areas like health, transport, etc., governments around Europe are very clearly listening around wanting to have and harness this talent and want competitive plural markets.
Right.
And I think that will help this next wave.
Any dissenting view on Europe versus the US?
I mean, look, let's be honest. It's not like anybody sits there and says, which is the best market for investment? I think I'll form my fund there. We go places based on where we already are. And I think VC is an incredibly local business. I mean, Bloomberg is a global company, and we considered investing in the UK, and we ultimately decided not to, not because this is not a great market. It is. A great company can come from anywhere, but because there are good investors here. And we didn't think we could be the best investors there are. So in fact, even within the US, we're focused on the Bay Area and New York. And even within the Bay Area, I'll tell you, I'm much more interested in the differences in the ecosystems of San Francisco compared to Palo Alto. And I have little kids. I don't like to travel. I don't even like to go to Palo Alto. And so, and there's plenty. My point is that we now live in a world where the profession of entrepreneurship and the tools have become so widespread that there is the potential anywhere. And so wherever you are, invest or build there. Founders often ask me, should I move to the Bay Area? I'm like, I don't know. Would you be happy here? And if the answer is yes, I mean, I think those investors who say you must move, I just think that's weird advice because these things are such outliers. They're such unique situations, every single one, that you can clearly make them work wherever you are.
How much of that is valuations?
I will argue with that, actually, to keep this spicy. I think that with enterprise software, it's not a rule that applies to 100% of companies, but it's a rule that applies to a lot of companies. I think the big prize is still in the US. That's where you're playing in the big leagues and competing with the best other products. That's where sales cycles are typically shorter because customers are used to buying from startups because they've been doing it for so long. That's where most acquirers are because even some of the most successful companies choose not to go public. They choose to go down the acquisition path. And last but not least, when it comes to talent, especially on the enterprise side, when it comes to go-to-market talent in sales and marketing, I think there's just more of it in the US.
So, but that kind of runs against your point about UiPath, which is a great enterprise software company based out of the UK.
A model, it's actually started in Romania. Commercial headquarters are in New York now. The model that we've seen work very well is where one of the co-founders, typically the technical one, continues building the development team in the European country where it started. UiPath is one example. Algolia is another example where the CTO and co-founder stayed in Paris. Whereas the CEO builds the commercial and go-to-market team in the US for all the reasons that I mentioned before. And actually, it's great because you have access to really talented engineers and developers here that tend to be more loyal. There's just not that much optionality. So it tends to be easier to recruit them and easier to retain them. And that's a model call it a dual headquarter model that we've seen work very well. And again, I'm not saying this is for every single company, but it works for a lot of them.
Speaking as a European that went to the US to start a business in 2000, back then, you had to go there because a lot of the elements weren't in place. I actually think now if I were to start a business, I would do it here. And the reason is the loyalty, the deep talent pool. A lot of my friends in the US who have started businesses or are executives at those businesses complain about how hard it is to hire. I mean, that's the problem here as well, but nothing like what they see there. You have to pay people excessive amounts, and they'll still leave you in a year because they keep getting headhunted. And when you have 10, 20% of your staff leaving every year, including some very good people, imagine the effect on your morale. It's not that great. So I think the model of having sales in the US does make sense. The Americans are still better at selling. It's a market that's more accepting of some of the products, especially in the SaaS enterprise space. So it just makes total sense to have this. Start here, and then this will change in time, I'm sure. But for the time being, you want to have, if your customer base is the US, have good execution.
And Siraj, how much of this is also valuation driven, i.e. valuations being better here in Europe than say in the US or China for that matter?
Yeah, I don't know. I'd love to hear other people's views here as well. But I think good investors are not necessarily looking at valuations from a bottom-up perspective. It's about, is this going to be an amazing company? And if so, am I going to make a good return on my investment? So it's not, you're making this much in revenue, therefore you should be worth this much. I think a lot of people do think that way. But the best investments are probably not going to happen that way because the best investments are never cheap.
Yeah. So
Can I just pick this one up? Because I think there's there's a lead lag in ecosystems. And unfortunately, the reality is ecosystems take 15, 20 years to develop. And what you have to see is success come through the pipe. And therefore, both entrepreneurs and teams learn how to scale businesses, see the scale of their ambition increase, and second and third time founders part of the ecosystem. Yeah. And then supporting that with investors and others. And it takes a number of mistakes and successes. And I think it's really interesting because I think this pendulum has changed. Because 10 years ago, we'd invest in a company, we'd all run to the US. That is not the de facto now always. It's case by case. And today in Europe, you've got $60 billion companies at minimum that have come through. And they've only generally come through in the last 4 years. And I think that the other piece of this kind of pipe is there's opportunity set because of this. And to Siraj's point, today the data shows there still is a valuation gap between Europe and the US. So, and to be a unicorn in Europe, you need 3 times the revenue that you do in the US, and probably 1/3 of the capital in terms of historic looks.
Right. So there is a gap here clearly, or at least I just want to move a bit toward China because I think it's a very important topic. Can we? Any of you want to talk to what we're seeing in China, which is enormous valuations, some really interesting companies, but huge valuations?
I think the most interesting phenomenon to me to think about is less the valuations on startups and more you asked us, how often are we just investing in the application versus the fundamental technology? VCs do not invest in fundamental technology. I mean, no matter what the VC marketing tells you, we are people whose businesses need to make progress in 18 to 24, maybe 36-month chunks, which means that they tend to be relatively established. And so what do we depend on? We really depend on academic research, on government-funded academic research in particular, and that's where the Chinese, avalanche of money, the Canadian consistent support, UK support, to a degree US support, has been so important. I mean, the US is really disadvantaged here. We're a laggard in that sense, and that may come to catch up with us. We're a laggard in many ways, by the way. Diversity of our startup ecosystem is another one where we're a laggard. I think where the US might turn out to excel, even relative to China, is AI may be an area where, because of the power of having a pre-existing relationship with customers and data, where the pendulum may swing back from startups to the established businesses. They may have a lasting advantage. And I mean, you're already seeing it in tech with Google and Facebook within the tech industry, Amazon, et cetera, having lasting advantages. And if that's the case, then the real marker for how fast it progresses through the economy is corporate acceptance. What is the managerial theory around an AI-driven business? How do I buy AI-driven software? And the US is actively experimenting with that, but right now that is an open field. Nobody knows what to do.
It's an interesting thought. Anybody else?
Yeah, I mean, China is amazing, right? I mean, there's the pace at which companies are being built there. You can't ignore that. We are a primarily European fund, but we have a China-based partner as well, and we've made a few investments there, and they've done incredibly well. I think the right way for us as European investors to think about this is, what are the ways our companies can work with those companies? And one of our companies, GraphCore, is very actively engaged with all of the big players, not just in the US, but in China from the beginning. It's not like, okay, let's serve, they have a processor that accelerates AI computations, but it's not like only talk to the American guys and then China later. Let's from the beginning think about that market as well. Yes, they're a dominant force in AI. Some of the best work, for example, is going on in Baidu for speech, and we should be cognizant of that.
Do you mind if I ask a question about it? Which is, I'm curious whether you guys see you have a more global perspective, that it is one globe with respect to these markets. Like, to me, one of the great ironies of modern technology is, on the internet, nobody knows you're a dog, and yet companies in China barely cross-populate with companies in Europe, barely cross-populate with companies in the US in terms of markets, talent pool, and I just can't figure out why, and I'm curious whether you guys see that.
I think there's a kind of, answering the question more broadly, I think, the historic adage was the US innovates, China copies, and Europe regulates, right? That has been history, but that's
been GDPR, it's ancient history.
That's been turned on its head. Clearly, as the conversation we're having around China shows, we've had to set up a satellite office in Asia for learning because we see much of the innovation in many of our spaces actually coming from China, from what they've done in terms of messaging and mobile. And the reason some of these valuations hold is we've never seen before two things. One, the market size is monstrous, but two, the speed of adoption in some of these markets is exponential. Because of the scale, but also the nature of the age and the demographic and the usability and penetration of many of these devices and services, especially mobile-based devices. So everything has been turned upside down, and the scale of government investment through the big kind of guerrilla companies from the Baidus and the Tencents, et cetera, and the number of patents and innovations in much of this space is pretty significant. So we watch and learn. And increasingly, we see our Chinese friends look at deals with us because they're investing all across Europe and the US now.
So can we talk about business model? So because China, you made a point about scale. All of that scale is consumer driven, right? So you're talking about B2C or B2B2C companies typically today, and this is where the money is. Do we have today in the AI space outside of China big consumer plays, or is it still primarily AI-enabled, enterprise-focused?
Well, even in China, a lot of the successes are enterprise-focused. So most of the investment dollars in China have been in computer vision, and computer vision has often been used for monitoring citizens, and a lot of that comes through selling it to government. And so I wouldn't necessarily say it's all consumer-driven, but some part of it is, some large part of it is. And then I think the same is true here. Coming back to our earlier discussion of AI becomes part of the fabric, and it's uninteresting to say there's an AI startup anymore because everyone does it. Across sectors we'll have the likes of Alexa and Google now and Snips doing this and for assistance, but you're going to have a totally different set of companies doing this for medicine. And so you'll have consumer successes, you'll have enterprise successes, and it's not like there's no reason that it would be just one or the other. It just affects all of them.
I want to expand a bit on the business model question of whether we're going to finally see AI really driving top line as opposed to providing savings.
Oh, it's definitely driving top line. I mean,
give us examples.
Google.
Well, among startups.
Okay. Textio, Cobalt Robotics.
You mentioned them before.
I know. I mean, here's the thing. The weird thing about talking about startups is we like to talk about the market conditions in general, but startups are about the exceptions. They're not about what the weather was like that day. They are about how hard you kick the ball. And so, it's fine to come back to the same handful of startups.
So tell us, for example, how Cobalt or Textio actually drive top line.
They sell a product that people buy.
Top line as I get that. But so they are clients. Are they selling?
Oh, you're saying when they sell software to a client, does that client end up having a higher top line?
Exactly.
Which enterprise businesses do that in general?
Well, no, there are.
I'll give you an example.
Go ahead.
An AI example. It's not an Accel company, so I'll break the rules. It's called Affinity. It's based in the US, and they have an AI tool that matches the most appropriate call center representative for that particular customer. So it gathers a bunch of different data based on outside sources and existing data on that customer, and based on personality, based on various parameters. It does that match in such a way that the customer will be happier. It's going to be easier to upsell that particular customer, and that, in theory, should have a top-line impact. I don't know the company very well, but there are businesses that do that.
The reason I kind of engage in that way is I think it's really hard to separate. Take CRM. CRM is a category where there's lots of room for AI. Is CRM an efficiency saving? Is it a revenue driver? When a business is fundamentally trying to do certain things that make it better, it's really hard. And I would say most clients do not say that their software vendors drive their top line. They say their fundamental value proposition to their customers drives their top line. So I'm not sure, I guess another way of putting it is, I'm not sure what hangs in the balance in the answer to your question. There's no, it is obvious to me that AI will both make for businesses that create new revenue and reach their customers better and save costs. It'll just make business run better.
Yeah, anybody want to care?
I think today, and maybe the panelists have a different view, a lot of what we see is probably more in process re-engineering, cost saving, restructuring, reinventing cost structures, right? In different ways.
Wow, then you should be investing in the US.
And so, no, a fair number, and I don't know what the percentage, but we also see a lot of different plays beginning to get to scale, improving revenue. And you need to unbundle this. Is it volume? Is it price? Is it fraud? And then if you unbundle revenue in different ways, there are a number of exciting companies who are looking at personalization, change of segments, dynamic pricing, reduction of fraud. And when you play through the levers, they're fundamentally restructuring markets, consumer proposition, product market fit with an end customer, et cetera, et cetera. So I think it's false to say, I think every part of a value chain from top to bottom is being attacked, being reinvented, and using data to, in real time, optimize, be it revenue, cost, or risk.
And if I may add to that, I think that even the AI companies that are helping rethink processes and that are helping automate certain parts of the enterprise value chain will have a spillover effect in that company having the opportunity to be more focused on out-facing activities and consumer-facing activities, and on branding and consumer happiness and so on and so forth. So I do think there is going to be, even from those products, I think there's going to be a spillover into top line increase.
I think it comes back to something Siraj said earlier, which is about advice in this domain. I mean, here you have 5 investors who can't even share a perspective on whether it's revenue or cost that's at stake here. And so if your mental model as an entrepreneur is that you're going to come to the wise investor who's going to share the benefit of their experience across many companies in AI at least, and maybe in general, it's just nonsense. Like, we are all just stabbing in the dark here trying to figure it out together. And the reimaginations that are happening are things that we're all just going to kind of go one step at a time on. And so I really do take to heart that humility of not knowing what advice to give when we are re-engineering the whole value chain.
Yeah, that's a great point. That's a great point.
And separating, the top versus bottom line, maybe it's worth doing, maybe it's not worth doing. There's whole categories of business that only exist because of machine learning or AI. Our product at Climate Corporation was because we were able to model this using machine learning. If we couldn't, we wouldn't have had a business. So it wouldn't have been about top line or bottom line. It's a business. It's binary, right? And the same could be said for autonomous vehicles and manufacturing. You see a number of examples of this now.
Right. AI is not like elevator shoes that you have a regular business and then you add the elevator shoes and it goes up. It's a fundamentally different way of running a company.
Yeah.
So we've got 4 minutes, and so it's time to talk about exits. We're close to the exit of our panel. So let's talk about exits and how we make money. So to date, it's primarily been M&A. Do we see IPOs on the horizon for AI-enabled companies?
I just want to come back to Google. I mean, it is an exception, but like this is an industry made of exceptions. So I think that it is, I don't know. I feel like we are seeing, I guess a question it raises is AI different than everything that came before? And despite being focused on it, our belief is no. It obeys the laws of business physics, which is to say most exits will come through M&A, most companies will fail, and some of them will remain and be lasting iconic companies, no different from any other.
I guess the question is probably more around, Google being the exception, it's probably more around, are we beginning to see companies that are scaling enough in revenue and creating enough of their own value to become too expensive and become the Netflixes and Airbnbs and Ubers of tomorrow that are fundamentally AI-based?
Well, there's a few things here that are very positive for that. So one is, we've had probably too many early exits here in Europe, and people say, well, where is the Europe or the European Google, the European Facebook? Some of that, I think, will change because we have more patient capital now, and we have larger checkbooks waiting to support companies that will be very large if they're given the right kind of capital, but they also execute well. So a lot of those elements are in place, and we have to give it time. As to what is the right exit, I think probably many of us on the stage aren't necessarily thinking about exits when we invest. We're thinking about, okay, is this something that is really going to be worthwhile or useful? And if it is, then returns will come with that.
Anybody wants to comment?
I think it's a natural maturing and evolution of a certain business model or of a certain new technology. It simply takes longer to build a company to the point where it makes sense to go for an IPO. And this has to do with the organization, infrastructure, processes, revenue, and so on and so forth. I am happy to say that I'm very bullish. I think we'll see a few of these short to medium term. I'm happy to say a few of them are in our portfolio. So I'm very bullish. I will also, again, play devil's advocate on the point that European founders still sell earlier than they should or than their US counterparts. I don't know, I'm surrounded by entrepreneurs that are super ambitious and that want to build really big companies and they want to take over the world. So at least in my experience, I respectfully disagree with that point.
Oh, the point is not that that's the case now. The point is that like 3 years ago, you could have argued in a few cases that if they had the capital, they would have stayed with it. But yeah, I totally agree with you. The ambition level is immense right now.
I think we're, as always, in a great time for entrepreneurialism for all of you to build the next multi-billion-dollar companies, because on this question specifically, the exit environment has never been as good as it's been before. So on the one hand, IPO markets and public, the great companies are staying often private longer, but then it's up to the choice of the entrepreneur and the team whether they want to go public. We're now seeing private equity come into this space as an exit option, which is new, especially in some of these AI or deep tech spaces where there is some sort of traction. In a world of structural change where the Fortune 500 average tenure is 15 years and it used to be 60, every corporate knows that likely they're going to have to acquire. to reinvent themselves to some extent. And therefore, the buyer universe is significant. And I think the key point is the point I'll echo from Luciana, because I think the opportunity space for really focused, outstanding problem solutions and teams is to build amazing outcomes. And we hope that many of the Europeans stay the course to build the game-changer companies.
Great. Guys, I'd like to thank you very much for a lively, super informative panel. Dharmash, Luciana, Siraj, Roy, thanks so much.
Thank you.
And have a great day, guys.
Thanks for having us here.